the dollar would collapse, the stock market would collapse, the bond market would collapse, banking system would collapse, the insurance companies would collapse, everything. This is the Great Reset. Could it happen? I don't know. I hope not. But I think that we will see a progression, a continued progression of de-dollarization, de-treasurization that we have seen accelerate over the last few years. It's not stopping. Buying gold and silver or looking at the reasons to do these things, it's not to become wealthy, it's because it is wealth. Gold and silver are wealth, and the biggest money in the world is proving that by their acquisition and their repatriation. The lack of trust is profound. And the bigger question is, how do we ever get that trust back?
Although gold and silver are stuck in neutral at elevated levels, one market analyst remains a long-term bull on precious metals. Ole Hansen, head of commodity strategy at Saxo Bank, published a report Tuesday saying investors and traders are just catching their breath after the market's nearly $250 rally from its February lows to its peak above $2,450 an ounce last month. President and owner of Miles Franklin Precious Metals, AndySchectman, expresses that major players' acquisition and repatriation of gold and silver highlight their enduring value as assets that transcend volatile currencies. Despite the dollar making up 58% of global reserves, the need to hold these dollars gradually diminishes. Schectman says this process, which he calls logarithmic decay, happens gradually but consistently. As fewer dollars are held internationally, returning dollars will increase inflation rates. Jerome Powell, chairman of the Federal Reserve Board, announced last week that the board has decided to keep the discount rate unchanged despite cooling inflation data from the Bureau of Labor Statistics that morning. From a technical perspective, AndySchectman mentions Project Sandman, a plan where 150 to 175 countries might simultaneously dump dollars in treasuries. He warns that if global confidence in the dollar drops, causing widespread dumping and hyperinflation, interest rates would spike, potentially collapsing the currency and severely straining overleveraged banks and insurance companies. Since March, the gold market has been on an impressive run, rallying to a new all-time high above $2,450 an ounce. Although momentum has stalled, it is important to recognize that the factors behind the rally have remained. The world remains rife with geopolitical uncertainty, especially ahead of the November U.S. elections. The U.S. dollar's status as the world's reserve currency continues to be challenged, and the global inflation threat persists. According to the World Gold Council's annual Central Bank Gold Reserve Survey, these are the top reasons retail investors and central banks buy gold. Reflecting on his years of discussing this issue, Schectman remarks on the rapid materialization of these concerns. Concurrently, he sees a slow but steady dollar and treasury devaluation trend. Now, we present the clips of AndySchectman's insights from his recent interview with Kitco News. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Theory really would be that as those dollars, there are way more dollars outside the U.S. than are inside the U.S. because of the stockpiling to buy oil for 50 years. And as those dollars come home and are sold back to the issuer because no one wants to hold them anymore. Now, it hasn't turned out into a full-fledged dumping, which I could see it turning into that at some point. But there still is demand for the dollar, as you mentioned. It still does represent 58% of global reserves, and there is dollar-denominated debt that needs to be paid off. But little by little by little, I call it logarithmic decay. Little by little by little by little, it starts to chip away as those dollars are there's no longer a necessity to hold them. And as those dollars start to come home, inflation rates would go higher and higher and higher and higher, and heaven forbid it's dumping. There's something out there called Project Sandman. Basically says there's a whole group of 150, 175 countries that have agreed to do just that, to dump dollars in treasuries at a predetermined time. The question is it orderly or is it chaotic? But as those dollars come home, the level of inflation rises as those currency units are added to the currency base here, which would then raise interest rates. And that's the big thing that I've always talked about, is that Powell doesn't want to raise rates, doesn't want to let the 10-year treasury get above 5% because of the over-leveraged system, in particular the banks and the broker or the insurance companies that are massively over-leveraged and undercapitalized. And as rates rise, and supposedly this magic number is at 5% on the 10-year treasury, things start to break. Now, if all of a sudden the world is no longer holding dollars and in fact forsaking and dumping them and throwing them back to the issuer, creating much, much higher inflation than the CPI would probably tell us, the market would demand a higher interest rate to compensate for that loss of purchasing power. You can't have double-digit inflation and single-digit interest rates. Your currency dies. So interest rates would rise to meet that loss in purchasing power, to compensate for that. And when that happens, that's when you start to get into problems where, as rates rise, things that in this country that make people feel wealthy, their stock holdings, their bond holdings, their real estate holdings, and the money held in the bank, all inversely correlated to that moment. And the over-leveraging of the banks in particular is a real big problem here. But if you think about it, if this happened all at once, if it was all at once, it would be catastrophic, as everything in this country is inversely correlated to a spike in interest rates, including the banks and the insurance companies. When you realize that this is something that, I've been talking about for 4 years and has materialized much faster than I would have ever have dreamed. When I started talking about it, nobody was, and now everybody is. And when I think to myself, could this really happen in a fashion that would be chaotic? I think absolutely it could. Look, it starts off slow, and the players that are in the know don't want to cut off their nose to spite their face. So it starts with little by little by little de-dollarization, de-treasurization, replacing gold or replacing treasuries with gold, doing it slowly, methodically. But when the world catches on that this is a trend in motion that isn't going to stop and will only get faster, that's when things get very interesting. And if we were to see an outright dumping globally, like in Operation Sandman, as Mike Adams talks about, it would be chaotic, because the natural reaction of the dollar creating hyperinflation, being dumped across the globe, hitting our shores in a tsunami of inflation, would be a massive spike in interest rates. The dollar would collapse. The stock market would collapse. The bond market would collapse. Banking system would collapse. The insurance companies would collapse. Everything. This is the Great Reset. Could it happen? I don't know. I hope not. But I think that we will see a progression, a continued progression of de-dollarization, de-treasurization that we have seen accelerate over the last few years. It's not stopping. The question is, how fast does it accelerate? And that's anyone's guess.
During the interview, AndySchectman stated that countries like Saudi Arabia quietly but significantly increase their gold holdings. He points out a trend where nations, including Iran and Russia, accept yuan for assets like oil and convert it swiftly into gold on the Shanghai Gold Exchange. Recent rumors that Saudi Arabia was moving away from pricing oil in dollars created a storm on social media and beyond. One post on X cited a mysterious 50-year-old petrodollar agreement between the United States and Saudi Arabia, which the post claimed had expired. Saudi Arabia will now sell oil in multiple currencies, including the Chinese RMB, euros, yen, and yuan, instead of exclusively in US dollars, wrote BRICS News. Regarding recent developments, Schectman pointed out Saudi Arabia's strategic moves, including declining G7 participation and joining Project Enbridge. These actions signify a growing trend among nations to lessen reliance on the US dollar in favor of assets like gold. Let's get back to the interview.
Not everything. A lot of the trading is done in a very opaque manner in what's called the over-the-counter market on the London Metals Exchange. So it's far more private, far less scrutiny, less transparency. They've spent a tremendous amount of money investing in natural resource discoveries, in gold and silver mines. I don't know how much they've been buying. Suffice it to say, by all estimations, they have been buying a lot and using the selling of treasuries and replacing it with gold for the reasons that we just spoke about. And it was Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia that just brought all their gold back from the New York Fed. So I don't have the official numbers, how much they've been buying, but if it's anything like the rest of the countries in the Southern Hemisphere, a lot. And let's remember one other thing, that Saudi Arabia has been selling their oil for the last year to China for yuan. And what then happens is that yuan is immediately convertible, because maybe China doesn't want to hold the yuan. They can immediately send it back and convert it into gold on the Shanghai Gold Exchange, which is cash and carry. Give me the money, take the product. And we're seeing an extraordinary amount of action coming off the Shanghai Gold Exchange, where these countries are accepting the yuan. For example, all of the, like, for example, you take a look at Iran, who just struck a deal with China to modernize their biggest airport. They're paying for it in oil, but any transactions that are done where yuan is received, they are immediately convertible into gold on the Shanghai Gold Exchange. This is how countries like Iran selling their oil for yuan, or Saudi Arabia doing it, or Russia doing it, these assets that are being sold for yuan can convert into the world's only other tier one asset. My guess, a lot more than we would be led to believe. And the repatriation from the New York Fed, I think, speaks volumes about their desire and their outlook to hold gold themselves and what that actually means. The Saudis just turned down an invitation to join the G7 meeting that was just here just a few days ago. In Italy, they turned it down. They didn't want to go there. They are uniting very, very closely, as you can see, with the rest of these countries. And when you take a look at they just joined fully Project Enbridge. And people have been following me know I've been talking about Project Enbridge for over 2 years. And that is a cross-border digital payment system that was designed by China, Hong Kong, United Arab Emirates, and Thailand. And they are now a full member. I'll read to you. It says, Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial in what could be another step towards less of the world's oil trading being done in U.S. dollars. The move announced by the Bank of International Settlements on Wednesday will see Saudi's central bank become a full participant in Project Enbridge. Now, what's interesting about Project Enbridge, they did 2 trial trades in 2023. The first was China using digital yuan cross-border with United Arab Emirates for oil. And the second one was digital yuan cross-border for gold. And in both cases here, I think what you are seeing are the 2 assets that are being remonetized. As I mentioned, Iran is paying China in oil to modernize their biggest airport. And, when you take a look at what gold represents and the massive amount of gold accumulation by the Southern Hemisphere and the drawdown in all of the world's exchanges and the convertibility of gold off the Shanghai Gold Exchange for yuan, all of these things are coming together where I think it's fitting, it's setting up for a perfect storm where Zoltan Pozsar is right. This is about commodities leading the way, and these countries are in a race to slowly, methodically accumulate commodities without causing too much attention. So am I surprised there hasn't been any official announcement? No, not yet, but their actions are betraying their lack of rhetoric. And I think it will become very obvious at some point. And that's when the de-dollarization and the de-treasurization accentuates. These countries don't want it to happen too quick.
This year, 70 central banks were surveyed, and 29% expect to increase their exposure to gold in the next 12 months. At the same time, 81% of central banks expect global central bank gold reserves to increase over the next year. How do you think the global shift towards alternative reserve currencies and increased gold acquisitions will impact the stability of the international financial system in the coming decade? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.